Hi, welcome to the Norwood Alerts. The Norwood Alerts solve one main problem, that is how to find enough trades to make some money or learn how to trade. And one of the main reasons that it takes new traders so long to get up to speed is because they can't find trades. And when they do find them, they're not sure of the signals and don't trust their indicators yet. And one of the main reasons that experienced traders don't make as much as they would like is because they can't find enough trades, even though they know what to do when they do find it. Now the Norwood Alert solves both these problems. You know which way and when to trade, and you get as many trades as you can handle. Now this does not mean that there are any more trades than there always have been. It means the alerts are watching all the currency pairs you want to watch on as many time frames as you can handle. So we've got a little illustration here we wanted to show you. Between this first vertical line, when you see the alert, we're just marking the alerts on the 4-hour chart. And we've marked 4 of them. This last one, it also marks that this is the end of the illustration period also. So let's get started. I don't necessarily trade 4-hour time frames, but that gives me heads up to go time my trades on other smaller time frames. We've started off here where the market was going sideways. This is not necessarily a normal time you'd think you could find trades, but let's go see what happens. And then we have a couple of good times where a good time when it's coming down, and then this one is going against the overall trend. So on a 4-hour, anytime I get an alert, I start looking for entry signals, and I know that the retracements are not going to be as great, but there will be some move. Let's go to the 1-hour chart. On the 1-hour chart, we don't see any signals between these lines telling us to go up, so there were really no signals on that time frame. Go to a 30-minute time frame. Now we have 2 right here that hit close together, another one here and another one here. Now you see the alert, it formed at the bottom of this candle right here when it opened, and so that move right there really had 20 pips in it. You could have easily taken 10 pips out, and there are some good moves right here. Now let's see how many alerts we can find on the 15. Now these are all entry signals, so if you get a alert signal, they'll probably be at different times on different time frames. And here's another alert. This one went against you a little bit for about 6-7 pips, and then there was good over 25-30 pips there. Some more signals up here, a couple of small ones over here. This one may have been questionable. You may have lost on that one, but then there's another one right here before the next time frame telling us going the other way. Let's go back to the 4-hour. Now we're looking at taking down signals. Let's look at the 1-hour. We had a down signal here, so we take that one. We don't take these up signals because the 4-hour told us it was going to be down. And we have another down signal just before this confirming down signal on the 4-hour. So we had 2 more signals there. And then right here we had a couple of down signals. These would have been a little bit questionable, so you may have lost just a little bit on some of these if you had taken them. And then of course the big down signal there, and then the 15-minute. Okay, there's some down signals here. Right, these are the little squirrely ones that we were talking about. Yes, if you had taken them, yeah, there were 10 pips, 5 pips. But the point is, you may not win on every alert signal, but how many did we lose on? 1, 2, 3, say we lost 10 pips on each of those. This one you shouldn't have lost anything on. This one you could have lost. This one, I shouldn't have lost on it either. And then of course these you would have just kept on really going. So let's go back to the 4-hour. Now we're looking down here at this point on, and we know that this is going to be a big move because you've already seen it happen on the other side of this one. So right here is the big move on the 1-hour. You got 4 good signals right here before we got a signal that's going back up. On a 30-minute, of course, we got this down signal before the bar, but this bar is a confirmation of already a down signal. So we got in on this big move. We got some good signals here. We got a couple more here. Then here's where it started going back up. So let's look at the 15-minute. We can see on the 15-minute we had a really great entry signal here. The other in the 30-minute started back over in here. The 15 got one there as well, confirming another big signal here. We don't take any of these because it's retracement. We know that the trend is down. and we had several right in here we could add on and take trades on. Here are some that may not have been as great as far as making trades right there, but if you'd managed them properly you wouldn't have lost. Even if you'd stayed in you would have been okay because everything else was still saying it was going down. And we quit taking down signals over right in here. So there's a lot of signals right there that we've gotten. Let's go back to the 4-hour. Now that was the big downtrend. You saw how many signals happen when you got a nice big downtrend. Let's take this one. This is a 4-hour signal going up, and it's trading against the overall trend. Many people cringe when they see this, but you got the alerts that are filtering out when to trade and when not to trade. It says up trade. Now we go to a smaller time frame. Let's see how many signals there are. There weren't any here. You wouldn't have gotten in on something that you couldn't manage. On this one right here, you may have gotten in. You could have at least broken even on that one. The worst case scenario, you lost a few pips. Okay, same one. Now here we get a great entry signal on the 30-minute. The alert probably wouldn't have gone off until about right there, my guess, because it had to wait until the everything's set up right. So someplace here at the bottom it would have gone off. But let's just say it went off right there. That was 25 pips. The whole move was about 70 some odd pips on that one. 15-minute. That's about the same place the 15-minute went off, and you got a couple of good signals right in there. So you can see there are plenty of signals going off on all these different time frames. So that's what we are looking for, as the alerts on the 4-hour is one way we do it, but that's a good way. So you can see that the alerts themselves, you don't need a lot of other signals to be able to do it, but you need to know how to use the signals and know when things are taking place. So let's count these up, roughly speaking. During the course of all those alerts, we had over 54 alerts. Now let's just say that only 45 of them were good and that we could have made money on. Now this, what we're doing here is only 45 alerts on one currency pair. So 45 times 15, let's say you're doing 15 currency pairs. You can't do that if you're just watching the smaller time frames. Start at the larger time frames and go down, then this is how many you would have had. If you'd started at the smaller time frames and got smaller, you would even had more signals than this. So that's between 675, so between 650 and 700 alerts on all 15 currency pairs in the course of about 7 days. And so let's just take the 650, so you didn't get 700, and divide that by 7 days. That's 92 signals or alerts a day that you would have had. There's got to be a trade in there someplace, no matter what time frame you have to trade. If you let the alerts do the watching for you, and you have a lot of currency pairs and use the larger time frames to time the alerts. So that's how you know how to trade in the direction of the trend, and we'll show you some ways of how you can trade when you're doing different time frames. So go watch the website at forexstrategysecrets.com and check out what we have on the videos on the alerts that's there as well. And we'll talk to you later. Bye.